Portfolio Builder members, today we had yet another winning trade. We haven't had a losing trade all year. We've been playing it safe, missing out on some of the upside. But if the market had been traveling sideways or down, we would have made even more money than we have so far. Let's look at Monday's trade through today and just look at how it's panned out. So on Monday, we wrote the 286 covered call to protect our SPY shares. In our model portfolio, we're trading 1,700 shares, so we have 17 covered calls to write. You may only want to use 100 shares, which is completely fine. And you can see when we write a covered call, that means we're agreeing to sell our shares at a certain price if a speculator, in fact, a bullish speculator, is willing to pay a premium for that right. And so you can see in this case, we agreed to sell our shares for $286 while it was trading at $288 for $2.41. So we agreed to take a loss of about $1, or rather $2.09 on the underlying asset, but in return we're collecting $2.41. So the profit baked into the cake is right there. If the market goes up or flat, we get that maximum return in terms of if the market goes up. Now, if it just goes flat or slowly drips down, we can also enjoy extra profits. Now, if we look at today's trade, what happened? We were able to buy back that same position for a debit of $1.47. So we made a profit on the covered call, but what happened to the underlying asset? Well, it did go down slightly. We predicted the move correctly, and we're able to protect our capital and generate a nice return. Now let's look at what return we did collect. So if we look at the summary of this, we sold the 286 call option for $2.41 when the SPY traded at $288.09, which you can see in the last price when we took the screenshot. Then we bought back the 286 call option for $1.47. So just on the covered call, we had a profit of 94 cents. Now, everybody else who's holding the SPY just had a loss during this period, but we actually generated a profit. Now, what happened to our underlying asset? And again, we're not super concerned with what's going on short term in the underlying asset. With our strategy, we're going to keep buying our 100 shares of the SPY, or multiples of it, and we're going to keep renting it out. It's a lot like having a fancy condo in New York and you're using the Airbnb app to rent it out for high premiums every Monday, Wednesday, Friday. And when you do this 3 times a week, 52 weeks a year, it adds up to an incredible amount of income and allows you to generate a profit in a sideways or down market. So we actually love it when the market goes flat or down because our strategy outperforms everything else out there. And we'll get into that in a little bit, but let's just look at the end result of the trade we did. So we were predicting a move to 286 today. We didn't get that. We only moved to 287.34, nowhere near that. So our defensive trade netted out a good profit, but not a huge profit. And so this is what we call the turtle strategy. We're not trying to be the rabbit who's going to burn out and not finish the race. We're slowly collecting profits. It's as boring as watching grass grow or paint dry. And so the net result was that we made a 94-cent profit per share times 100 shares. So we made $94 on the covered call. But the underlying asset did drop from $288.09 down to $287.34. So that's an unrealized loss. But in the long term, we think the SPY will most likely go up. That's why we're trading the SPY in the first place. So we had a 75-cent unrealized loss on the underlying asset. That gives us a profit of $19 per contract. And if we do that, measly $19 3 times a week, 156 times a year, that's still $3,000 of income, playing it super safe and being wrong, not predicting a down move. Rather, thinking a down move's coming and the market stayed strong. And that's what's been happening to us all year, and we keep collecting profits. So that's a 10% annualized return. Don't forget the 2% dividend on the SPY. So in a worst case scenario where we're playing it safe and we're wrong, the market keeps going flat or up, we're still generating a huge 10% annualized return plus a dividend. Now our real goal is to make more like $100 3 times a week, 156 times a year. And so that adds up to $15,600 of income. But there's going to be times where we're playing it safe. So we'll get into that in a second. The new trade is exactly the same as Monday's trade. We're doing the 286 covered call expiring on Friday. And the credit we can pull in is $2.04. So times that by 100 shares. And that's how much you're bringing in per contract. If you can afford more than 100 shares of SPY, that's the best place in the world to park your money and generate retirement income. So here's our return so far to date. We launched December 12th, which most people would probably thought was a great buy the dip opportunity. But what happened after that was one of the fastest crashes in the stock market in years. Last time we saw a volatility like this that lasted that long was back in the 08 crash. And so we had very little drawdown because when the market's going down, our strategy writes the strike below the trading price. And we'll talk about how that protects our capital and allows us to generate consistent income. So right now we're sitting on a 6.39% return, $34,000 in profit with a $500,000 model portfolio. This trades for 2 minutes, Monday, Wednesday, Friday. And if you haven't done it yet, you should switch your brokerage to Robinhood. We have a link in the email. If you sign up through our link, we get a free stock and you get a free stock, so that's a nice bonus. These guys are the best. They are paying for every single little commission related to our program. They're based in San Francisco. They're valued at $5 billion, and they have a huge problem. They're getting tons of youngsters to come in with $1,000 accounts, but they're desperate to bring in bigger sized accounts. So they will love you and take good care of you. They have a great phone app that can do our program with the click of a button. There's no reason you can't follow this program with about 2 minutes of time, Monday, Wednesday, Friday. Closing the positions, 1 click in their phone app, and opening it is just 1 more click as well. Just tell them how many covered calls, which is based on how many multiples of 100 you have, and then pick the strike and the expiration date. 2 minutes. 3 times a week, you have income for the rest of your life, and you have protection of your capital. So I'm just going to finish inputting our trade into this spot right here. So you'll see our return does spike when we do this, but that's not the real return. Once we cover it, that's the more accurate return. So you can see the profits jumped, but we're going to have to give a little bit of that back when we cover it, most likely. So if you do like spreadsheets and you like to keep track of what you're doing, in your email you have a link to your very own copy of this spreadsheet so you can manage your trades. If you don't like spreadsheets, don't worry about it. This is the easiest trading strategy in the world for generating a consistent income with the least work and being able to protect your capital. Let's take a quick look at how this new trade alert is protecting our capital and generating income at the same time. So I've zoomed in here, but here's what I want you to see. The SPY is trading at 287.43 last price when I took this screenshot, so you can see that. I'm selling the 286 strike, so I'm agreeing to sell my 1,700 shares of the SPY ETF for a loss of $1.43 per share. Why would I do that? Because some crazy gambler thinks the stock market is going to go up forever. I mean, get this, the stocks have been going up for 4 months almost straight, and there's plenty of people who still want to bet that the SPY is going to go higher and higher and higher forever. So we're happy to take that gamble and let them bet. So they're betting $2.04 that the SPY is going to go higher from here. And if they're right, they'll make a huge return, maybe 50%, maybe 100%. But we don't care, because if they're wrong, we keep all of their money and we get to keep our SPY shares. And so we're protected down to 286 between now and Friday. Now, what would happen if the SPY dropped tomorrow towards this 286? Well, the value of that call option is going to drop in value. We can buy it back and write a new one even lower. So by simply writing a covered call below the trading price, you give yourself the opportunity to generate income, a consistent return, over and over and over every Monday, Wednesday, Friday, and protect your capital at the same time. Now, we have more ways to profit from a downturn in the market, but if you've ever bought a put option or a call option on the VIX, you know that's a very risky predicament that hardly ever pays off. What we have here is a risk-free way to make money 3 times a week, 52 weeks a year, and profit if the stock market goes up, sideways, or down. If you can find another service out there that can consistently bring in these sort of profits and protect your capital, I'd love to see it. It just doesn't exist. This is the only risk-free way to do this. So that's a good summary on the webinar today. Every day at 1 Eastern, we have a live webinar, Q&A. We're going to get into some technical analysis, some fundamental analysis. We'll look at the news, and we'll talk about how to get even more extreme in terms of making money on the downside. So sure, we would love for a stock crash to happen. Number one, it's just like the doctor. People oftentimes don't want to fix their problem until they have a big problem. And our product is one of the few that does extremely well in downturns. Now on Thursday, tomorrow, we have a different class. It's our emerging markets class. So if you have time to join that, we welcome you into that. That one's performing very well. And on Tuesdays, we have our high yield program. That one costs $150,000 to follow in order to build the same model portfolio we have. But it's generating twice the income. It can generate around $3,000 to $5,000 a month of income doing the exact same thing. So we'll cover that more on the webinar as well today. And finally, if you're getting towards the end of your free trial and you'd like to save money on your membership, if you give a call to either John, who has 35 years in finance, Series 7, he's been a partner in major firms, give him a ring at 505-217-8757. If you'd like a different point of view, call Mike. He's the retired doc. He's been one of our first clients, and after getting to know him, I brought him on as part of our team. 505-322-7515. They both have discounts on all 3 products. So to summarize, the basic program trades Monday, Wednesday, Friday, and it's very good for new traders who only want to manage 1 position. If you're a little more advanced and you'd like to make twice the income doing the same thing, our Tuesday class is great for you, but you need $150,000 capital. That's our diamond level membership. It outperforms the SPY and it trades less. Now the catch is you have to have $150,000 to follow it, and now you're going to be managing covered calls on 8 securities instead of 1. So it's slightly more advanced. We have the nice spreadsheet to keep you in order, or you can do it all on your phone if you just keep track of how many multiples of 100 you have of each ETF. Now on Thursday, that's our gold level membership, and that's helping you get into the emerging markets. Take a little risk out of being completely concentrated in American companies and get some exposure to China and its major trading partners. So thanks again. Hope you can make it on the webinar. Anybody who does attend does get a 7-day extension to their free trial one time, and we look forward to seeing you on there. So thanks again for your time, and look for a new trade alert tomorrow morning, same time.